Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to take a look at a request from a subscriber. CJ wanted us to take a look at NHI. So that is exactly what we are going to do. National Health Investors. This is a REIT out of the real estate sector. Let's jump right into the video. So if you want to know more about this REIT, www.nhireit.com is their homepage. Go ahead and check them out. Incorporated in 1991, National Health Investors, Inc., ticker NHI, again out of the real estate sector, is a real estate investment trust. That stands for REIT. That's what REIT stands for, R-E-I-T, REIT, specializing in sale, leaseback, joint venture, mortgage, and mezzanine financing of need-driven and discretionary senior housing and medical investments. NHI's portfolio consists of independent, assisted and memory care communities, entrance-free communities, skilled nursing facilities, medical office buildings, and specialty housings. As you can see from the map below, these are where they are located, spread out across the United States, a lot in the Midwest, some out on the West Coast, East Coast, down south here in Texas. Right, senior housing, 106 facilities, skilled nursing is 68 facilities, 1 hospital, and 15 shops. I'm not sure what shops mean, what exactly it is. I'd have to do more research on that. But again, this is their homepage here. If you want to check them out, go ahead and do so. And the reason we are looking at them today, they were down 1.64%. Again, we are talking about National Health Investors, ticker NHI, out of the REIT and real estate sector. 52-week range as low as $50.22, as high as $67.16. They are approaching that 52-week low range. Average volume 278,000. Today was 191, so a little less volume today than overall. Market cap of 2.416 billion. A beta of 0.88, less volatile than the overall market, even though today there was quite a bit of volatility in a steady decline. Looks like a bit of a sell-off here, right? That's why it's down 1.64%. PE ratio is very elevated, 35.69, but for REITs, you want to look at funds from operations, right? PE ratio is not a very good indicator. Earnings per share is $1.56 earnings date. The next one will be between February 20th and February 24th. For dividend is $3.60 paid out in the year. They do pay out quarterly, I believe. We'll see that here in a minute. They have a nice dividend yield at 6.36%. Ex-dividend date coming up December 29th, so you would need to buy them by the 28th if you were interested to get the next dividend. And the 1-year target estimate, at least from Yahoo Finance, where I pulled this information, not affiliated, just where I like to look for some information. They have a 1-year target estimate for the stock price of $61.50. So it does speak to some potential upside in the stock price, at least according to Yahoo Finance. And then we'll jump over to stockanalysis.com, and the 13 stock analysts that they have had look at it call it a consensus sell. And I'll just mention this real quick before we go any further. I always recommend looking at more than one site. So stockanalysis.com and Yahoo Finance are the 2 places I pulled some information from. There are other ones out there. Just make sure you are always looking at more than one source so you can verify that the information you are receiving is accurate. Again, according to 13 stock analysts that have looked at this stock here, they call it a consensus sell, and it's actually right on the edge of a hold and sell right there. They have a low estimate of $47.47, so that would be 14.44% decline from where it currently sits. If it happened to hit their average of 61.37, that would be a 10.62% increase in stock price. And if it happened to hit their high of $71.40, that would be a 28.7% increase in the stock price. This 47.47 would be a new 52-week low. And to be honest, I think I'd probably like them a lot better at this 47.47 than where they currently sit, and maybe even lower. Now, the reason I said I would like them at 47.47 was because there are a couple things that really jump out here that I do not like. Negative dividend growth, right? I went back a little bit further to 2021. Looks like they used to pay $1.10, and some fractions of a penny over here. And they dropped that down in June of 2021 to 90 cents, and they've been at that 90 cents pretty much running flat here for a little over a year now. So no dividend raises, and actually if you go back into 2021, they've got a negative dividend growth. So I don't like to see dividend cuts. That's never a good indicator. The other one that jumps out to me, even though REITs have some rules where they have to pay out more than average payout ratios, this is extremely elevated, 229.3%. That tells me that they are doing something funky, paying their dividend out of more than just free cash flow, whether that's taking out loans or selling off parcels here. I'm not sure exactly how they're doing it, but this is not sustainable. A payout ratio of 229.3%. That means that's over double their free cash flow, and this is probably why they had to cut the dividend back here on March 2021, because this just isn't sustainable, and I would not be surprised if they cut it again if this was maintained. They are a quarterly payer and currently pay 90 cents per share, but I would be very, very careful in any stock like this. Again, even for a REIT, if it's over 100% payout ratio, they are pulling cash from somewhere, whether they're taking out loans or pulling from future free cash flow, whatever they're doing. This is not a good sign. So this would not be one I was interested in, but I always like to try to get out videos that are requested from my viewers. So if this is one you are interested in, I would really sit back, maybe take a step back and watch this one for a while, see if they can bring this back in line, and maybe, like I said, maybe they'll do a dividend cut, and then after the dividend cut might be a better time, or if the price drops significantly. Whatever's going on with this company, it's an issue. So be careful here. Again, looking at the numbers here without doing a very deep dive like I typically would, this would not be just surface level, would not be something I would be interested in. But that doesn't mean it's not for you. That's completely up to you. What you invest in is always up to you. I'm not here to tell you what to do with your money. It's your money. You make your own decisions. We're all adults, and that's what this channel is here. I'm going to try to find value and give you my opinion, but at the end of the day, you take the information I give you and you make your own decisions. All right, that's a quick hitter. Wanted to get that one out there. NHI, let me know what you think about the video. Let me know what you think about the company. Is it one in your portfolio? Is it one on your watch list? As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. No, seriously, go down there, hit that subscribe button, hit that notification bell so you're notified whenever we post new videos. Go ahead and do that now. And drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. So I'm only sharing my opinion. Invest in your for educational and entertainment purposes. Investing involves risk. Can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Seek the advice and counsel of a certified financial advisor.